Okay, we will continue with the cash book exercise from the past year question. Steve is a sole trader who maintains a full set of accounts, include the 3-column cash book. Explain why the cash book is both a book of prime entry and also part of the double entry. Book of prime entry, you have 7 book, which is sales journal, sales return journal, purchases journal, purchases return journal, cash book, petty cash book, plus general journal. So this topic is related to all the exercise for this is related to the cash book. Okay. So why cash book perform the 2 roles, book of prime entry and also the double entry? So the first one, cash book is a book of prime entry because it uses the business document to record the first recording. This is the first recording that they used to it. And then next is that why is a double entry system? If you remember the T account, cash book is like a big T because they have many columns for the discount, cash, and the bank. So cash book is also part of the double entry system because it acts as ledger account for the cash and bank. So that is the reason for the why perform the 2 roles. Next is on 1st Jan 2012, Steve has the following. So this is the opening balance. And January 3rd, this is a transaction. Let's see what other question they ask. Okay, they asked to prepare the cash book. So let's prepare the cash book first, the format. Okay, let's continue. Let me copy all the information. Steve Hansen, cash book, date, detail, discount, allow, cash, bank. Another side also the same. So we just put in the debit side first. After that, we will move to the credit side. So it's a copy and paste. But the only thing is that discount, I have to change it to the discount received in the credit side. So the format, we already done for it. Now what we got to do is, we copy this format to the question side by side so that easier for us to prepare. So first of all, start from the beginning of the year, January 1st, and balance brought down. Cash 100, and then bank is 1942. January 3rd, pay Paul Yim 398 by check in full settlement of his account of. So here in 2012, on the January 3rd, payment to the Paul And the amount that we pay by the check means bank account, 380. But they say that full settlement, 410. So actually they want us to calculate discount received. So discount received is taking 410 minus 398. Next is that on 8, purchase office equipment, 1795, and pay by check. The moment you saw the check, this one will be the bank account already. So office equipment. And the amount is 1795. 13, withdrew 250 by check. Check again. But this one is to pay personal motor. The word personal is drawing account. So always remember personal drawing account. So we will put in drawing. And the amount is 250. The next one, a check received in December 2011 for 115 from Suez was dishonored and returned by bank. So in this case, bank returned to us, we have to return back to Su. So on the 20th, we have to return to Suez. And this is a dishonored check. And the amount is 115. So next on 28, cash sales. So cash sales means that cash received money from where? From sales. So cash received money 1970. And next is that pay all the remaining cash into the bank except. This except 50 means that balance carried out. So balance carried out is 50. They're trying to tell you this is the 50. Now what the question is asking us to balance off and transfer to the February. So based on all these transactions, so we balance off the account first. So debit and credit subtotal must be the same. So as usual, we subtotal because this one do not have the subtotal, is a zero balance because no amount in the discount allowed. But we still put it in just to have the same amount. So these two, discount allowed, discount received, don't need to be the same. This one, you can ignore it if you don't want. Don't need to put also 5. But come to this one, 2070. Here is 50. The question saying that pay all the remaining to the bank. It means the amount to be paid to the bank is taking debit total minus the balance carried out. So this is the amount transferred to the bank. Don't forget, this is a contra entry. So contra entry is debit bank, credit the cash. So on the 30th, in the debit side, we had to put cash contra. In the bank column, put in the amount 2020. Next is that we have the debit bank more than the credit. So in this case, we have to calculate how much is the balance carried out. So minus. So this is the balance carried out amount. So we continue February 1st, balance brought down 50. Okay, so this is the balance carried out, balance brought down for the cash put down. So the next question, the C. Here they're asking that Steve bank statement. Okay, sounds like this is something related to the bank statement and also cash book bank account. Sometimes it's related to the bank reconciliation statement. Okay, let's see what is the question about. Stewart bank statement for January 2012 show that his bank account was overdrawn. Bank overdrawn means that the business used the bank money to pay off the expenses, so that Steve is owing the bank. Explain why this overdraft occurred. Why Steve can owe the bank? In what situation can cause that still owed the bank. But from here, we saw that it's a debit balance. How come it say that owed the bank? So one of the possible is could be this money has not reached to the bank point of view. Or maybe this amount is too big. Bank do not have the amount, don't have the money to pay off. Because if you look at here, beginning, after minus this Paul, we left not enough money. So we take 1942 minus 398, we get 15. But we have to buy the office equipment. In this case, this will cost the overdraft, this amount. So one of the possible reason, because they just say explain why this occurred, but they didn't say what could be the confirmed answer for it. So one of the possible answer is that purchase of office equipment which exceeded the bank balance. Okay. So other than that, what else that possible can happen? It could be due to the cash transfer to bank has not been clear. Has not been clear in bank statement. So it means that actually the bank has not recognized the transfer yet. So that could be the reason. Number two, explain how the overdraft could have been prevented. So how we want to prevent the problem that we have overdrawn. One of the possible is we delay the payment. We delay the purchase. For example, this is a big amount. It's the easier one. We just delay to the next month. So we can say delay the purchase of office equipment to following month. So then you won't have the overdraft. So that could be the reason that you can use it, because this is a big amount. The rest are the small amount. So not necessary to cause the negative. So this is only the easier way. We just delay it. Next question, D. Explain how the business entity has been applied in the treatment of the personal motor expenses. So as I said before, accounting principle is in your last chapter. So along the way, when there's a question related to it, I will just explain. So I won't, we will go to take some time to go to the section, the last section. So what we're going to do, based on this question, I will just explain what is called business entity first. Okay, business entity is to the business when do the recording, the business and the owner transaction must be separated, which means that you cannot combine both and put into one book. So that is not allowed under accounting standard. So the business and the owner transaction must be separated. So that means for the business entity. So how we apply this business entity in this personal motor vehicle? You saw the this personal motor vehicle on 13, I put into the drawing. So whenever we have the personal expenses, so the treatment of the personal motor expenses will cash to will debit to drawing account. This will reduce the owner capital because this not belong to the business, belong to the owner. So this debit personal to the drawing account, it will reduce capital account. So because this is a 2 mark, so what you can say, first, explain what is business entity. Second, how is the treatment of these expenses? E. On 20th March 2012, Steve decided to write off 115 owed by Sue as a bad debt. The new term for the bad debt, just to highlight, we call irrecoverable debt. So take note that don't use the bad debt, use irrecoverable debt. Prepare the journal Steve Hansen will make to record this. A narrative is required. Narrative means that narrative is reason. Write a simple reason why you put this double entry. So on 20th to write off 115 by Sue. So means the double entry will be debit irrecoverable debt and credit who? Credit Sue. Sue will account will close after we write it off. So the debit 115 irrecoverable debt and credit 115 Sue. So they ask for the narrative. Narrative, if you're not sure how to write, just copy from the question, which is in here. They say that write off the amount owed by. So you don't need to write long sentence, short sentence. Just put it right. Written off Sue West as an irrecoverable debt. That's all. Don't need to write the amount because the amount you already put into the debit and credit. So this is the question. Now let's move on for the remaining. For F, on 14 May 2012, Steve received a check for 115 from Sue. The account already closed. Suddenly, we receive back the money. There is one of the account we call bad debt recover. Okay, so the double entry to put in, because we received the check, so we will debit the bank, and then account to be credit. So this is a debit, this is a credit. The account to be credit is irrecoverable debt recover. So there is the double entry to put into this when you have the bad debt recover or irrecoverable debt recover. Next is G. Suggest 2 ways in which Steve Hansen could reduce the risk of irrecoverable debt in the future. How we want to make sure customer will pay us on time, or how you make sure the business won't have the bad debt. One of the easier way, change all sales to the cash term. That means immediately get the money. There is a easier way. Other than that, what else? If you no choice, your business have to do the credit term. One of the way is that you get people, hire people, keep on chasing the money. So that is called hire credit controller to monitor the collection so that you will reduce the bad debt because you keep on call customer. Or other way in the nowadays in the accounting system, they can set the credit limit. Set credit limit to each customer. So once the customer beyond above the limit, they can't buy from us anymore. That's a good way to do it. Okay, next move on.